The S&P/TSX fell while the Nasdaq edged higher. Canadian markets retreated as investors reacted to escalating supply risks in the Middle East. The S&P/TSX Composite Index dropped 150.82 points to finish at 33,119.83. Oil prices climbed because Iran blocked the Strait of Hormuz. Crude contracts rose $3.80 to settle at $87.25 per barrel. Global agencies released 400 million barrels from reserves to curb price spikes. This record release aimed to offset production cuts from Middle East suppliers. The Nasdaq remained resilient despite heavy losses in other major indices. Investors rotated back into tech as AI infrastructure spending provided a growth cushion. The Nasdaq Composite gained 19.03 points to reach 22,716.14. NVDA invested $2 billion in Nebius to expand global AI compute capacity. Meta projected 2026 capital spending between $115 billion and $135 billion. MSFT reported cloud revenue of $51.5 billion, marking a 26% increase. Demand for AI chips also boosted AEIS, which saw shares surge 97.8% over 6 months. Gold and silver mining stocks plummeted during the session. Safe haven demand weakened as hot inflation data drove investors toward interest-bearing bonds. SSRM declined 3.4% and HL fell 5%. Precious metals dropped because February CPI growth remained at 2.4%. This figure stayed above the central bank target and fueled fears of further hikes. Gold prices fell 1.1% to $5,183 per ounce. Silver prices slid 5.3% to $84.85 per ounce. CDE also dropped 6.3% as lower metal prices squeezed mining margins. Markets ended the day volatile as energy and inflation concerns dominated sentiment. Investors now await the next CPI report to gauge the severity of war-driven price hikes.